It's been another year of resilient performance for FGEN, despite the headwinds that listed infrastructure and renewable companies have faced, with inflation remaining high and interest rates declining more slowly than anticipated. FGEN's portfolio delivered a total NAV return of 0.6%, with the reduction in NAV per share of 113.6 to 106.5 pence being counterbalanced by the dividend of 7.8 pence per share. This is supported by a healthy dividend cover of 1.32 times, backed by record cash distributions of 90.4 million, underlining the quality of our portfolio's assets whilst continuing to maintain one of the lowest levels of gearing across FGEN's peer group, something we put great value on given the elevated interest rate environment. FGEN has a long track record of delivering strong and consistent dividend growth, underpinned by our sustainable dividend coverage. And this year we are delighted to have marked our 10th consecutive year of dividend increase, with an increase of 2% in next year's dividend target to 7.96 pence, coupled with underlying growth potential from a high quality portfolio. It was a year of disciplined and proactive management across our diversified portfolio, with a particular focus on value enhancements across some of our operational assets and a continued build out and ramp up of FGEN's growth assets, Rjukan, CNG and the Glasshouse. And these are assets that are well positioned to drive capital growth over the medium term and which all made encouraging progress throughout the year as we work towards operational and sales ramp up. And elsewhere, whilst the HH2E impairment was an obvious disappointment, value growth across the portfolio has helped to offset some of this value loss and endorses the diversification strategy that we emphasise. And finally, we also completed 2 value accretive and strategically important asset disposals totaling around 10% of the portfolio, supporting both debt reduction and shareholder returns through our 30 million share buyback programme, which saw 19.2 million returned to shareholders during the financial year.
Well, the first thing to say is that the board's overriding objective in reviewing FGEN's strategy has been to strike the right balance between continuing to generate income to support the progressive dividend and delivering net asset growth in the medium to long term. So following a detailed review involving working closely with shareholders and an independent advisor, the board concluded that FGEN's best path forward is through active portfolio management and a refined investment strategy. So this means a disciplined focus on core environmental infrastructure with stable inflation-linked income and potential for value-added growth. So focusing on selective value enhancements across our existing asset base, and that's really following the proven successes that we've had previously, such as our Cramlington biomass facility, which we bought out of administration back in 2021. We've completely turned it around to be one of our best performing investments. Then in the medium term, we'll be working towards exits from growth assets like Rjukan and the Glasshouse when they're fully operational, and we think then can command meaningful valuation uplifts. We've also announced a proposed change in the investment management agreement between FGEN and Foresight, and that would see fees calculated half on NAV and half on market cap, capped at NAV. Well, of course, the focus remains on delivering consistent income, driving as much value as possible from our growth assets, and deploying capital selectively into proven technologies aligned with our environmental infrastructure mandate. We believe that investors shouldn't have to choose between earning attractive returns and delivering a real-world positive environmental impact. The investment opportunity in environmental infrastructure has never been stronger, and now really is the right time to invest in assets that enable decarbonisation and accelerate the global energy transition. While macro conditions indeed remain challenging, we believe these long-term tailwinds of decarbonisation, energy security and sustainable resource management only strengthening the investment proposition. And FGEN is really well positioned to capitalise on these trends, combining stable returns with potential for capital growth.